Hi Ajay, since you follow quality and growth investment philosophy, isn't it the portfolio expensive?
Yeah, hi Niranjan and hello everyone. You're absolutely right. Quality companies and high growth companies never come cheap. They're always expensive. But the price earnings framework itself is a function of longevity of growth as well as sustainability of high profits in a business as measured by their high return on equities or return on capital employed. So therefore, very fundamentally, there is a basis for such high quality and high growth businesses to always trade at a high valuation. The most simplistic tool that we use for valuation is the price earnings multiple, which is nothing but price per unit of earnings. And this unit of earnings is basically different across different businesses and different industries because they could come at a very different capital efficiency and they could come at a very different sustainability of future growth. Therefore, businesses that are extremely capital efficient and therefore high in terms of their return on equity, as well as the ones which are showing structural growth rather than cyclical growth, will always trade at a premium.
Is UTI Flexi Cap Fund expected to perform across the market cycles?
Niranjan, I would say there can never be any fund or any strategy which can ever perform across market cycles. You see, if you are true to your philosophy, then basically you are constructing a portfolio looking at certain important things that are part of a stock selection framework. And we all know from history that markets are always rewarding a few businesses or a few styles, as you may want to call them, and they are punishing at the same time a few businesses, industries, or styles. In fact, currently, as we all know, that the growth style is being punished, whereas the value style is being heavily rewarded. So I would say anybody who's very passionately following a particular style would always see some amount of volatility linked to the market cycles, the market's preference for one thing over the other. And I would say so is the case with UTI Flexi Cap because we are extremely passionate about quality and growth investing, and we have therefore never compromised on this attribute. We are facing a bit of an underperformance right now on account of market's preference for value versus growth.
Here is the last question to you. What is the average holding period of the stocks and what is the exit strategy followed in the fund?
So Niranjan, the one thing that we are very clear about is that we buy businesses for their outcomes rather than our expectations about how their stock prices would behave over the next few quarters or maybe even the next couple of years. In fact, we absolutely have no clue about how the stock prices would behave. But we do have a reasonable idea, basis our very strong research, on the outcomes of these businesses. And because we are more oriented towards understanding the business, we therefore develop conviction on these businesses, which gives us the ability to hold on to them for a fairly long period of time. I would say that our holding period is on an average between 8 to 10 years. Similarly, the second part of your question, which is on the exit strategy, I would say our exit strategy is simple. Till such time that the business is strong, that the business remains both high quality and high growth, we would continue holding on to it, which would mean that sometimes even when the valuations for such businesses go up, we don't ever exit it. Yes, we would slightly prune down our exposure and bring it back to the allocation that we want for that particular business, but we would never sell it completely. We would only sell, regardless of the valuation, when the business outcomes, according to us, are about to turn weaker, either in terms of the quality or in terms of growth. Thank you everyone for listening in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.